Ladies and gentlemen, good day and welcome to Q3 FY22 earnings conference call of Bharat Forge. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Kalyani. Thank you, and over to you, sir.
Thank you, and good afternoon, ladies and gentlemen, and welcome to our Q3 analyst conference call. I'd like to welcome all of you and thank you for taking your time. As usual, I have with me our teams from sales and business development, finance, investor relations. So give you a brief update and then open up for Q&A. So in Q3, the performance was as expected. In the last quarter, we had mentioned that we expect Q3 to be slower than Q2, and therefore total sales were flat compared to previous quarter. Exports were about 10% lower, while domestic grew by about 16%. The drop in export revenue was primarily due to the production cuts because of semiconductor-related shortages in Class 8 trucks. Our EBITDA margin at 25.2% against 28.3% is basically due to certain one-offs in Q2 and Q3. There is a detail of this in slide 10 of the update. The normalized EBITDA in Q3 would be about 26.4. It's a decline of 120 basis points sequentially. We have an exceptional item which includes a gain on the fair value of our investments in Teva Motors and an exceptional expenditure of 99 million towards VRS. If you remember, at the beginning of in 2020, we had taken a write down in our valuation of our investment in Teva because of the slowdown that had happened due to COVID and other issues. But Teva has successfully managed to weather the storm and raise substantial funds over the last 8 to 12 months, and has been valued quite well by the markets, and they are now well on the path to taking their products to market, and therefore these investments have been revalued as is required by the accounting standards. One highlight, however, is that the 9 months, I will say that I have never seen so much pressure and volatility in the markets. Huge demand on the passenger car side. Most of our global passenger car customers are sold out at least for next year, and some even for year after next for many of their popular models. At the same time, there is unprecedented cost increases on raw materials, on transportation and freight, on energy, and constraints on raw material and labor shortages due to COVID in Western geographies. So you have to take all these cost increases, inefficiencies into effect and look at our margins and profitability against that lens. So if we compare these numbers with previous numbers of say FY19, 9-month FY19, our EBITDA was 28.7%, and for the 9 months as against 27.7% for 9 months of 22, despite volumes being 20% lower. And after the exceptional item of gain, the PAT for the quarter was 3374 million for this quarter. We've had a number of order wins recently, about just over 100 million, which includes about 50 million for EV platforms across passenger and commercial vehicles. These are small, but I think this is the beginning of much bigger opportunities. Our overseas operations have also registered a fairly decent performance with a revenue of almost 23.5 billion rupees and an EBITDA of about 10.6%. The capex for aluminum forging facility in North Carolina has been completed, and the commercial production will start in the middle of the year. We expect this facility to ramp up over this year and next year start having meaningful revenues. And between the two new aluminum facilities in Germany and in the US, we expect that this revenue will more than double over the next 2 to 3 years. The balance sheet is in a very strong position as usual with a net debt equity of 0.07. This is post our investments of about 300 crores in the first 9 months in EV, in US aluminum projects, and in the acquisition of a company from NCLT in Baroda. Standalone business is doing fairly well operationally. We do have supply chain issues which persist in the global automotive industry, which is affecting the ability for many of our customers to produce and ship out vehicles. Although the end demand from the market remains robust, we expect both the domestic and export markets to witness positive sales development in the second quarter of FY22 across all major sectors, barring the agri-equipment sector, Q4 of 22, barring the agri-equipment sector. In the international business, also we see strong demand, but there are severe and unprecedented inflationary cost pressures across most variable cost elements such as raw material, logistics, and energy, which will take a toll on the profitability of the companies in the initial quarters till we get the recovery of these cost increases, for which we are actively engaged with our customers. And I would now like our head of sales and business development to talk about some of the key markets globally. Over to Subodh.
Thanks, Amit. So, in continuation with the comments from Amit, we do see a overall robust market from a demand point of view. And to illustrate that, from a commercial vehicle point of view, we see the US market and the European market quite strong. As you know, most of production slots at the OEMs for 2022 have been filled out, at least till late November, mid to late November, and possibly into early December as well. In India also we are seeing better growth as compared to the previous years. We are still away from the peak, but we are moving up in the right direction. Passenger cars in the world, the market is supposed to do better than what it did last year. Hopefully there is a view that the semiconductor crisis will start easing up in another 6 months or so. So the overall expectation is there should be a stronger market as compared to last year, both in North America, Europe, as well as in India. In the construction and mining side, just given the government stimulus in most markets, there is a strong demand seen, and I'm talking about both Europe, US, and of course with the pragmatic budget, we expect the same in India as well. Oil and gas is doing better than what it was last year. We play in the fracking business of the oil and gas side, and we see a significantly improved activity of the fracking side. I must caution that currently everybody is focused on using the assets they have, but there is demand that's coming in for spares for that asset. New builds in this area are still weak overall, but that will improve as the year passes, is the impression. But overall, we expect the oil and gas market to remain stable, which is also supported by oil prices, which are expected to remain stable in the 80s, mid-80s in particular. In the renewable side of business, which we are also engaged with, overall, we see a stable demand given the focus on environment and allied factors. So we expect to see, I would say, strong growth pretty much in all geographies of the world in the renewable segment, particularly wind.
Okay. So I think we've given you a brief overview, and I think we can now take your questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question comes from the line of Kapil Singh with Nomura. Please go ahead.
Hi, good afternoon, sir. Firstly, I wanted to check your outlook on both domestic and export business, particularly on the truck side, because while demand is strong, from a chip shortage perspective, are you seeing that easing significantly in the current quarter or later on? So what is the production outlook, if you have any color there? Same thing for India. Then I'll come to the second question.
Okay, so Kapil, my colleague Subodh will answer this question.
So Kapil, for the next quarter and a few months thereafter, we see a reasonable level of demand from the customers in line with overall market projections for the year, and this applies to both in India as well. There is definitely some ups and downs relative to supply chain issues for other parts, but nevertheless, given the high demand, OEMs are doing everything possible to maintain their build rate. That is the impression we have. So we see a stable demand in these months.
Okay. And what about India? CV demand, is it looking up? Any outlook you would like to share there?
At this point, as compared to what happened in Q3, Q4 is definitely looking better. And if you look at the sales of the retail sales of all the big four truck players in January, then it seems like they are moving in the right direction for growth in Q4. So we have to, unless something very crazy happens, we expect them to have growth over Q3 in Q4.
Okay. And we've seen pretty good traction in the non-auto segment. How much is oil and gas out of this?
So in this quarter, the oil and gas segment business was about 175 crores. But I just want to highlight one thing, that last quarter and this quarter, we have had the impact of the aluminum cylinder supply, which is now complete.
Right. And so lastly, we have talked about this new order wins of $100 million.
Sorry, what is that?
The press release talks about the new order wins we had in the 9 months of about $100 million, right? So, along with this, what is the outstanding order book that has to go into production as of today? And when do these $100 million hit, full production?
So our order book that has to go into production is, I would say, well in excess of on a consolidated basis, on an annual consolidated basis, I would say close to 400 million is yet to go into production on an annualized basis.
Oh, that's pretty large.
Capacities are already in place.
Okay. And by when could we expect to hit that full production?
The full amount will ramp up by 24, but it will start from next year.
Okay. Thank you. I'll come back in the queue.
Yeah.
Thank you. The next question comes from the line of Jinesh Gandhi with Motilal Oswal. Please go ahead.
Hi. My question is on the order book. When this $50 million of EV platforms. So can you throw light on what kind of components are we? Is this pure electric components or this also includes?
These are for pure electric vehicles, and these are electric powertrain components.
Okay.
And we also have now started receiving orders on power electronics and control electronics for commercial vehicles.
Okay, and this would be through REFU or on our own as well?
No, on our own.
Oh, okay. That's interesting.
I mean, obviously REFU is an operating company, but also on stuff that we have developed in-house.
Right. That's good to hear that. Second question is on the aluminum forging business. So this quarter would have been a very dramatic quarter because of the energy cost inflation. Would you throw light on how big was the impact of energy cost inflation in this quarter for BFAT?
Yeah. Actually the real increase will happen in the Jan to March quarter. Because energy prices went up in December.
Okay.
In this quarter. Another thing that I'd like to mention. So another thing is that please bear in mind that a lot of geopolitical and other issues are creating energy cost increases in Europe right now.
Right. No, that's fair point.
Completely out of anyone's control, unfortunately.
Sure. And the 30,000 ton capacity in Europe for aluminum forging is now fully operational, right? The 10,000.
Fully operational is not fully utilized.
What would be utilization in 9 months?
I would say the current rate of utilization would be about 10,000 to 12,000 tons.
Oh, 10 to 12.
I would say 50%.
Okay. And so this will also fully ramp up next year?
Next year and year after next.
Okay. And any word on...
This ramp up has got slowed down because of the chip shortage and other supply chain issues. Because overall vehicle production has come down.
True, that's a fair point. And any word on the second phase expansion in US, given that that capacity is also fully sold out?
Yeah, so I will be in the US very soon, and we will by March end take a call on the second phase.
Okay.
Yeah.
Got it. And lastly, what would be the impact of steel and other commodity passed through in this quarter? Benefit on the revenue side?
Total impact this quarter would be just 1 second. You are talking about compared to last year, right?
Compared to last year or the second quarter?
So compared to second quarter, it's about between 30 and 35 crores.
Okay. Thanks a lot.
Thank you. The next question comes from the line of Pramod Amte with InCred Capital. Please go ahead.
Yeah, hi Amit. In these unprecedented inflationary times, both at the commodity and the processing cost, how does your cost escalation terms work, and do they break down, or what's the thought how to recover it?
Yeah, again, I will let Subodh answer this, but we have different, let's say, clauses and agreements with different customers. Some are on a monthly basis, some are on a quarterly basis, but Subodh will explain.
Sure.
So Pramod, the steel, let's say for us, the major part of the inflation has been steel, and as we have talked before, all of it has always been recovered through a mechanism. So let me say that mechanism continues as far as steel is concerned. There is a little more complication this time because of higher steel inflation, but in principle we have a mechanism to address that. There is because it changes in energy and logistics, we are also working with our customers to set up mechanisms for these factors. We are insisting on a full pass-through of these inflation, and accordingly those mechanisms are being addressed so that they can be reviewed on a quarterly basis.
Sure. Thanks. And second is with regard to the sales traction. You guys alluded that your sales is still 20% below the FY19 levels. If I understand rightly, the large part of the shortfall seems to be on the industrial side, if I'm not wrong.
It's actually on both. It's both on industrial and commercial. Oil and gas activity is not at the previous levels. Neither is the construction and mining and stuff yet. And obviously the automotive is all down because of the chip-related activity. So everything is down.
But in terms of directionally, it looks like the
Look at India CV. In FY19, it was 475,000. This year it is going to be 275,000.
Yeah, but at least we get some grip in terms of numbers, volume, where they are, and how that can pan out in the future. But if I had to look at the industrial side, are you getting any bigger confidence now in the sense that at least in 1.5 years, 2 years, you will cross that historical peaks?
I'll tell you why I do have the confidence that we will do it is because we have now entered a lot of new sectors, especially the renewable energy sector in this area, that will allow us to grow our business and de-risk that business much more.
Okay. This is through the acquisition which you made?
No, not only through acquisition, also organically.
No, I said the production capacity which you acquired from that entity. So that is giving that comfort? Or,
that actually will be a further growth even beyond that. Whatever we are talking about will only take up 20% of their capacity. If you look at their sales, they are running at 20 odd crores a quarter. And they have the same facility as we do. So they are doing 10% of what we do. So obviously they have huge capacity still available.
Okay. The last question is with regard to your investments into the EV space. You have done into the two-wheeler space and also into the Teva. You yourself have gone through the cycle of writing it down and participating at the higher valuation. How are you looking at this space, especially where the valuations are going through the roof? You guys will continue.
Participated at a higher valuation. What has happened is Teva has raised money at a significantly higher valuation.
Right.
Therefore, our investment in that has got revalued to the value at which they have raised fresh capital.
So you are maintaining the stake there, or you are diluting?
Not in any fresh money. Okay.
Okay.
So our stake has come down in percentage terms, but in value terms, it has significantly gone up.
And is that because of some discomfort on valuation or incremental capital allocation you don't?
I don't want to put in unlimited amounts of money in these businesses. The purpose of putting money in these businesses is to learn technology and bring those products into Indian market when they are applicable to our markets. And that is what we are doing.
Okay. And the other venture is two-wheelers, which also seems to be at an inflection point now, the way the product has.
They have now already launched their first two products, and they have received only from Pune, where they have launched, a very good response. And they will be producing and launching their vehicles. By April, they will start supplying their vehicles.
And there you have a decent chunk of stake, right?
More than 60%.
So in case for execution they need a funding, you guys will be participating there, or how to look at?
We are fully working with them in making sure that they have everything they need to go to market. In fact, their plant is already almost constructed and all their equipment is mostly in and going in for trial production.
Okay. And in that sense, any commitment in terms of next 1 and 2 years, how much investments you may have to put into this? Teva, you said you will not be going in, but at least for Torque or others.
We are going to not make significant investment in company as such, but we will make significant investment in making components, systems and subsystems.
Okay, sure. Got it. Thanks and all the best.
Okay.
Thank you. The next question comes from the line of Ashutosh Tiwari with Equirus Securities. Please go ahead.
Yeah, sir. So we talked about that the overseas CVs will pick up, but can it go back to say 2Q or 1Q levels in Q4? How do you see trajectory over there?
You think can Q4 overseas CV go back to second quarter? numbers, which were higher than this.
Yeah, we expect them to go.
We expect them to be higher than Q3 for sure.
Okay, but the visibility of going towards 1Q or 2Q still is not there.
1 second. It's a 20%. I think it will be pretty close to Q2. I think it should be pretty close to Q2.
Okay, so we see strong traction over there. Okay. And secondly, like India industrials, if I look at X of that oxygen cylinder, it was around 226 crores. So how do you see that ramping up in the subsequent quarters, 4Q and 1Q? And we had talked about some Kalyani Forge order earlier, defense order, which was supposed to start from fourth quarter. So how do you see the ramp up in that going ahead?
So the vehicle orders will start getting delivered in small amount in quarter 3, then it will roll in, small amount in quarter 4 and then in the first half of next year. But we are getting more and more orders, so I think this will be a continuing business.
Okay, so but overall industrials India will see a strong growth going ahead beyond this 226 crores?
Yeah, absolutely.
Okay.
I think there's a fair chance to say that we can grow this to a 300-400 crore business in the next 2 years per quarter.
Okay.
India industrial.
Sure. Okay. Thanks a lot. Bye.
Thank you. The next question comes from the line of Hitesh Goel with CLSA. Please go ahead.
Thank you for taking my question, sir. Can you, sir, break down the industrial business in terms of, you talked about the oil and gas business and exports, but how much is coming from the construction equipment, renewable energy, so that we get some sense?
Renewable energy right now is very, very small. Okay, I would say oil and gas is about 50%, and about 10% is aerospace and defense, and then 40% is other industrial, which is construction, mining, etc.
This is in exports, right? And in the domestic?
In domestic, I would say out of the 220 odd crores, more than 1/3 is construction and mining. Agriculture is about 15%. Aerospace is about 10%. And then you have assorted other sectors which are about 30%.
Okay, great. Thank you.
Thank you.
Thank you. The next question comes from the line of Jeetu Punjabi with EM Capital Advisors. Please go ahead.
Hi, Amit. Thank you for this. So, a couple of questions. One, can you take us through your outlook over the next 18 months on key demand segments, for example, U.S. trucking, European trucking, and industrials, or whatever? So, just give us how you're thinking.
Jeetu, you're a bigger expert on the US CV market than I am. So, all I can tell you is that there is extremely strong demand for transportation, being driven by this whole logistical boom in the delivery services. Secondly, the infrastructure spending that is starting to take place in the US or should be starting to take place in the US, whether it is replacing bridges, roads, airports, whatever. So in that background, I would say that the US is definitely going to see a fairly sustained and strong growth in transportation demand, at least for the next 4 to 5 years.
Okay, and what about, how do you look at India? Is India going to...
I think India is going to be on a 10-year growth trajectory, because the kind of infrastructure spending that is being talked about and unlocked now is going to create a secular growth trend for at least the next 8 to 10 years.
Okay, and the converse question is, what are you less excited about in the backdrop of what we just spoke?
Look, I think, the one thing which worries me is cost and inflation, because in a backdrop where demand isn't, or let's say production isn't at the highest level, costs are escalating for all kinds of, let's say, extraneous reasons. Then I am a little worried about Europe, because Europe is very sensitive and dependent on a lot of geopolitical issues, whether they affect raw material supplies, energy supplies, supply chain issues, etc. And I also expect that a lot of suppliers will go bankrupt in Europe in the next 6 to 12 months. And that is not a problem for us, but then what happens is that disrupts the overall supply chain.
Right. And actually one final one. So how do you think of capital allocation in this context? Are you happy to do?
We are going to only allocate capital on growth and not on any of our existing business and products, unless we have long-term take or pay or business assurance. So we have created a strategy, where we want to be the last man standing in our business for however long these core products are made. And there we are working on extreme focus on reduction of cost and efficiency and better technology in order to get a larger share of that market as it progresses.
Okay, fantastic. Good wishes as always.
Thank you so much.
Thank you. Bye.
Thank you. The next question comes from the line of Jinesh Gandhi with Motilal Oswal. Please go ahead.
Yeah, hi. Just wanted to check on the torque side. So what is the capacity are they starting with, and any sense on the orders which they've got on their hand?
So I think the first initial capacity they're setting up is going to be about 50,000 pieces, 50,000 numbers of two-wheelers and an equal number of three-wheeler powertrains. And I think just from Pune they have received over 1,000 orders, and they stopped after that. They didn't take any more orders.
Okay. And are you helping them with respect to ramp up and having more wider launch on pan-India basis?
So we are not working actively, but we are helping them on the industrialization strategy.
Okay, not on the front end side.
Look, we are not in the B2C business, so I wouldn't call us experts in that, but we are connecting them with people wherever it is needed, and whatever help they need is being provided.
Sure. And secondly, on the Teva side, so you indicated there was recent fundraise. So at what valuation did the fundraise happen, and what is our effective stake after not participating in that?
Just one. So they have done 2 rounds of fundraise. The fundraise that we talked about was the previous one, after which we have done a reval. Recently they have done another fundraise at double the value of that. And post both these fundraises, our stake is just under 10%, about 9.8, 9.9, something like that.
Okay. But you would not be aware of the last fundraise valuation?
It's double of what it was in the previous.
And so what was the previous one? Sorry.
So recently the company is valued in excess of 400 million.
Got it. Great. Thanks and all the best.
Thank you. Again, anyone who wishes to ask a question, please press star and 1 on your touchtone telephone. Thank you. The next question comes from the line of Ashutosh Tiwari with Equirus Securities. Please go ahead.
So we talked about this power cost impact, possible impact on margins in overseas business. Because this huge increase in power costs in these European countries, do we see that probably forging company in India like us will benefit in terms of increased outsourcing towards India?
In the longer term, yes, not immediately.
Okay. So that will it be substantial impact for us in the fourth quarter?
There will be a substantial impact, but obviously over a period of time that will get reimbursed. We don't produce energy; we have to buy energy from the grid.
Okay.
So there is a price for it. Everybody has to pay it, and that is well understood that there is a pass-through on these variables.
Okay. That was from my side. Thank you.
Okay. Thank you.
Thank you. The next question comes from the line of Kapil Singh with Nomura. Please go ahead.
Hi, sir. Just a follow-up. If you could talk about whether Bharat Forge has bid for the PLI scheme under the component champion, and which are the areas that you are targeting over there. So.
Sorry, you're asking me about PLI. So we have applied for the PLI scheme under two categories, under the component champion and OEM.
Okay. And as a OEM, what are we targeting to make?
So we have interest from several two-wheeler companies for us to manufacture for them, and from certain global startups in commercial vehicles where they want us to manufacture on a EDDM basis, engineering, design, development and manufacture basis. So we will manufacture the components and make the product and supply it on a either rolling chassis or finished product basis to them for commercial purposes.
And in the component scheme, what products are we looking to make?
So on components, we are going to make pretty much every component that goes into an electric vehicle. The high value components. I mean, not chassis and stuff, but right from motors, power electronics, control electronics, battery, BMS, all that stuff.
Okay, perfect. Thank you.
Yeah.
Again, anyone who wishes to ask a question may press star and 1 on your touchtone telephone. The next question comes from the line of Ronak Sarda with Systematics. Please go ahead.
Yeah, hi. Thanks. A question on the international CVs, especially on the North America side. So, do we have what are the production targets for CY22? We highlighted the CY21 numbers were much lower than what they were initially expected.
For CV?
For CVs, yes.
So what are the production targets for Europe and US for CV for 22 compared to 21?
So in the US, they are expecting, let's say the Class 8 segment that we primarily partake in to be somewhere in the region of 300,000 units. And in Europe, they are expecting a similar number.
Okay. And could this go up if the supply chain eases and there is more availability on the supply side? I mean, I'm assuming these are post, taking into account the supply chain constraints.
See, at this point, most OEMs are not increasing their production slots as such in a month. I mean, they are maintaining a certain equilibrium, whereas
Right.
The indication of demand is there. But the broader impression is this may not go up from a production standpoint. They will continue to accumulate backlog.
Got it. So it will spread into CY23 then to have a smoother production. Sure. Second question, Amit, for you. I mean, on the talk, production side, how much of the components are we supplying in terms of maybe the number of components, name of components, or the value?
So we are going to supply,
to the powertrain?
we are going to supply the housings for the battery, for the motor, and also we are going to manufacture certain the motor and the power electronics and control electronics for them.
Sure. So, okay. And on the motor side, have we developed the motor with someone with some technical collaboration, or this is
proprietary motor?
Right. And what would be the power range?
Power range is peak power from 6 to 9 kilowatts currently, and the second model will be from 9 to 20 kilowatts, or from 10 to 20 kilowatts.
Right, and we can manufacture both of them.
Yeah. We are setting up a line which can do flexible manufacturing.
Right. Sure. Thanks a lot, and all the very best.
Thanks.
Thank you. The next question comes from the line of Balchandra Shinde with Kotak Life. Please go ahead.
Hi, sir. As you mentioned, in Europe there is a cost pressure. Would like to know on console basis how we see the profitability. Means like, do other regions also we will see the margin pressure, and relatively our console level margins will be under pressure, and for how many quarters we see this scenario?
Look, I don't have a magic crystal ball, so I can't tell you how many quarters. But we're right now in the deep of winter. It's one of the most severe winters in the last 10 to 15 years, both in Europe and the US. So even in China and places in Saudi Arabia and some places it has snowed. So places which normally don't get the severe winters have had a very severe winter. So oil and gas usage for heating has gone up. And at the same time, we have geopolitical issues which are causing cost pressures. So honestly, I can't give you a forward-looking view like that. All I will say is that it takes, when there is such a tremendous increase that happens so suddenly, it takes 3 to 6 months to resolve this through a dialogue with your customers.
Sure. And on current basis, how much relatively EBITDA contribution is from these regions right now for us?
Our EBITDA for the 9 months from Europe was about from our overseas subsidiaries. About 235 crores. What is your question? Just repeat your last question again.
The regions where we are seeing the cost pressure, how much EBITDA contribution over last 9 months was there?
It will be roughly about 235 crores from those operations outside India.
Sure. Thanks. Okay.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Amit Kalyani for closing remarks.
So ladies and gentlemen, thank you for your time and interest in asking all these questions and getting to know more about what's happening in our company. It's been a challenging quarter, but I think we are heading for exciting times. We have a lot of irons in the fire, and we expect that as these come to maturity, we will start seeing tremendous growth in top line, bottom line, and the kind of business that this company will do in going ahead in the future. The new Bharat Forge is going to be quite different from the old one, and we look forward to you being a part of this journey as we go ahead. Thank you very much, and if anybody has any direct questions, please contact our team. Best wishes to you all, and for a safe and healthy time, and have a nice weekend. Thank you. Bye.
Thank you. On behalf of Bharat Forge, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.